Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Jens Nielsen. After 25 years in the IT and telecom world, Jens reached a point in his mid-40s where he realized that financial stability alone was not enough. He wanted more control over his time and a greater sense of contribution. That desire set him on a new path, commercial real estate investing. What began as a few small deals quickly grew to a full-time business. Since 2016, Jens has been the partner in over 2,700 apartment units and multiple industrial properties across several states. He has raised more than $10 million in private equity and participated in projects valued over $250 million. He has also started to share his knowledge and give back and is a certified high-performance coach as well. Jens, I am looking forward to our conversation today.
Me too, Keith. It'll be a lot of fun.
Absolutely. Why don't we start with your background, where you grew up and what eventually led you to commercial real estate?
Yeah. So, as people may notice, my name and my accent is not American. This is actually the 30th year in this country. So I've lived here longer than anywhere else. Left Denmark in the early 90s, lived in London, England for a little bit, and then came to Maryland in 1996, so 30 years ago, and did the traditional thing, Keith, where, got a job, got my education, went to college, got my undergrad and my graduate degree, and then worked for various corporations throughout the following 25 plus years, anything from startups to large telecommunication corporations to local government to Native American tribes. So did a little bit of everything, all like telecommunication into IT and IT management. And it was great, right? It was a wonderful time to be in IT because, everything was growing and there was a high demand for employees. So I never had a problem finding any jobs, and, my income kept growing. And so me and my wife, we had a comfortable life. She's a nurse, so she had good employment and I had good employment in IT. But eventually I was hitting my into my 40s, and I was like, wow, I don't want to do this another 20 years, another 25 years, right, to get to this quote unquote retirement. Right. And I had seen other friends who had started businesses and doing other things. I was like, man, I'm missing out on something here. That was kind of the feeling I had. But everything looked like another job, right? If you wanted to go into consulting or starting a business, I wasn't about to start do a traditional startup in my 40s. That would just be crazy. And then I stumbled on real estate just kind of a little bit randomly. I picked up, I think it was Brandon Turner's book, How to Invest in Rental Real Estate or something. Picked that up in Audible, walked my dogs, and I came back home and told my wife, this is the thing, right? This is what we need to do. Just makes all kinds of sense to me. And that was a little over 10 years ago when I listened to that book. And then very quickly, I took action by, reaching out to people I knew in the community and that I thought was into real estate. It's like, how does this work? What am I supposed to do? And, they just started, mentoring me and connected me with some, brokers and stuff. And I started buying smaller multifamily in Albuquerque, New Mexico. At that time, I was living in southwestern Colorado, and that was in, kind of in the mountains. There wasn't really anything that made sense. So yeah, I bought our first fourplex 10 years ago. So that was, the story in a few minutes, and I'm happy to dive into any of that.
Yeah, absolutely. Where in southern or southwestern Colorado were you? Just out of curiosity.
I was in Durango.
Okay. Yeah, we used to go there every year, kind of camping and stuff. And, my wife and I actually almost went, we went last year, to Purgatory or, to go skiing and stuff. But, anyway, love that area. Love that particular area.
Yeah, it's great for living and the outdoors. It's not so great for real estate investing because the property prices are rather high.
That's right. Exactly. And then so you started out buying some smaller multifamily, and then very quickly, it sounds like you've obviously built a huge portfolio. Tell me a little bit about that journey. You bought a fourplex, it sounds like, initially, and then what success did you see with the fourplex that led you to decide to now let's do this again or move up and buy something larger?
Yeah, so it took it took a while. I remember the goal. So the initial goal was to leave the W-2 job, right? Quote unquote, retire, but having passive income so that I didn't need to rely on a job or any kind of pensions or anything like that. And it was a 10-year plan. It was very linear, like one fourplex a year. Because okay, that can get me to $10,000 over that 10-year period, right? That was the initial plan because that made sense on paper. Because that was before I learned about raising money and syndications and all this other stuff, right? So it made sense.
Right.
And in the first year, we had saved up some money. We don't have any kids and good income, so we had saved up some money in the stock market. So we fired our broker, pulled the money out, and then put that into real estate. And Keith, back in those days, fourplexes were trading at $125,000, $150,000, right? So we're not talking about a huge investment, right? You could get into it for 20 or 30K, which wasn't that much. Still, not nothing, but not what it's looking like now. So we bought 2 fourplexes in that first year, and then I created a good relationship with the broker, this older gentleman who really loved to work with newer investors. He didn't have to because he is, he owns a bunch of stuff himself and whatever, but he likes to work with newer investors. So he kind of became my mentor. And I remember at the end of 2016, he came to me with this 11-unit deal that was a bit of a hairy deal, but because it was kind of run down and stuff. But that was the first time where we started looking at alternative financing because the seller carried back the debt, and we're able to have a pause on payment so we could put the money back into it and everything else. So that was a great starting point. So in the first year, we scaled up to 19 units rather quickly. And so to your question, what did I see in that? Well, I saw that, you put your money into it, you manage the manager, and then you sit back and kind of collect rents and so on, right? You don't have to. Yeah. I think the key thing here is you decouple your income from your time. And that's what we need to do, right? So that in the first year. And then in 2017, me and a buddy bought a small mobile home park outside Durango. That was kind of, I think, all we did in 17. Then in 18, I came across this 38-unit deal also in Albuquerque. And I was like, okay, well, I can't buy this by myself. And I asked my broker, hey, Chuck, do you want to partner in this one, right? Because I can probably get some friends to, help invest. And he had a friend that could, so the 5 of us came together and raised some equity, did a joint venture and bought that 38 unit. And that was my first taste of putting, multiple people's resources together to buy a larger deal. It's like, oh, this actually makes sense now, right? And so on. And we still have this deal, and it's, 8 years later, and it's fantastic because it's been refinanced and it's cash flowing like crazy and stuff like that, right? So that was my first entry into the using people's resources to buy something bigger.
And that one you said was a joint venture, kind of how that one was structured?
Yeah.
Okay. And so you got exposed to, hey, I can probably do this, buy larger properties if I'm leveraging, not only other people's money, but in this case, sounds like you were able to kind of leverage each other's experience and whatnot. So what happened after the 38 unit?
Yeah. So then now we're at 2018. I was getting super excited about it, right? And, starting to listening to all kind of podcasts and reading books. And I realized I probably need to get around more people because I'm still living in Durango, 20,000 people, not too many syndicators there. So I joined a coaching mentoring program and started going to events to get around people with a different mindset, with more experience. So I was started, traveling, to Florida and Texas and California and other places to go to these events to start getting around people that were already doing bigger things. And that's where I realized, okay, I need to start finding more partners if I want to do something bigger here, right? Because my dream's okay, well, syndications, larger 100 unit, 200 unit deals is probably where that makes sense to get into that. So started going to this, started finding some people that I liked and trust. And would, when I would come home to Durango, I would, be on Zoom calls with people and just trying to find people that I kind of liked and wanted to partner with. And then the opportunity came in 2019. That was the first year I really got into the syndication stuff. I got invited to participate in three deals actually. One in Phoenix, 200 plus units, where became kind of a co-DP, helped equity raise, helped due diligence, underwriting, and so on. Same thing with the deal in Atlanta, and also a deal in Erie, Pennsylvania. So now I'm in, if I'm just thinking about it, in three different directions, and that was wow, okay, now this starts, I'm starting to see the mechanics of how this is put together, right? I mean, you the underwriting, the getting the debt, raising the equity, and then once you close the deal, the asset management and all these different things. So I started seeing, because I was part of a much more experienced team, but I started getting a small share of that and see how that all worked out. And we've since sold all three deals. So we don't have 2,700 units right now. We had invested in, so that was, 600 units plus that first in 2019. And it really, it was cool because I saw how different operators were working and what worked and what didn't work in communication and so on. And at that time, I also found, so that deal in Erie, Pennsylvania, the reason why we started investing up there, because I found at one of these events, I met my partner who lives up there, who has been in the business for many years. And he was also starting to syndicate, and we really, jived in the sense that we like each other, and he's the broker connection. I am the analytical guy and stuff like that. So that seemed to work, right? So then that we started really focusing on the upper Midwest, and scaling down the team to working with, a few individuals.
Okay. Yeah, that's interesting. So when you did the one in Arizona, and it sounds like Atlanta and Erie, was that all within the same, around the same year, or was that spread out over a couple years, or what was the experience
that
there?
Was all in 2019.
All 2019. So
all in 2019.
Yeah, so and those were all different operators?
Different operators, yeah.
Okay. So yeah, that gave you a good basis, like you say, to kind of understand who you like, to work with. Not only that, but just kind of everybody does something slightly different, right? So you can take the, what you think is positive from certain ones and duplicate that. And then it sounds like you met your partner, on the Erie one, and from there have continued to build things.
Yeah, exactly, right? Because I realized that I wanted to get, the first few deals, that was a few $100,000, maybe $300,000 or $400,000 that I was able to raise. So, my ownership is, so small on a $20 million plus deal. So okay, this is cool, but I wanted more I wanted to really learn the business more from the inside out, right? Not just be kind of a co-sponsor and having a small stake in things. Although the Phoenix deal has still been the best one when we sold, it was 350% return to our investors in like 3 years, something like that.
Wow,
so
incredible.
that was the best deal we've ever done. But we sold that right before the Phoenix market started to really slow down and so on. But my point was, I was like, hey, I want to make this a business. I can't make this a business if I just have these tiny slices because it doesn't give me enough income. Right. And then, I started working with my partner in Erie. And then the pandemic hit, right? And everybody, interest rates started plummeting, as you know, and everybody has money and time. And that's where we really started to actually get much more busy into that market. So the Cleveland, the Erie market, even into upstate New York and so on, because we started seeing, deals come, we started creating a bigger team, we were able to get access to more capital. So we did a few more deals in Erie, we did a bunch of deals in Cleveland and so on over, 2020, 21, 22 is those 3 years. I think one year we closed like 9 deals and stuff like that. But that's when the portfolio really grew. And also where, we may got a little bit far out of our skis there as we started taking on, riskier debt and so on, which causes a few challenges along the way and so on, right? But then at that time, that also allowed me to quit my job because now I was syndicating enough deals to earn enough acquisition fees and cash flow from my own deals and so on, right? So it all kind of like, this actually makes sense as a business at that time. So I left, 2020 when everybody was watching Netflix all day. I was doing real estate deals and left my W-2 job,
Yeah. That's exciting. And maybe let's talk a little bit about some of the challenges because obviously, Jens, you weren't the only operator. There was a lot going on right around that time frame, and quite a few folks got a little bit hung up on, the type of debt, whether it be bridge debt or whatever. And so would love to hear some of the experiences that or maybe lessons that you learned throughout that time frame.
Yeah. I mean, definitely the debt, right? We bought 187 units on short-term floating rate, right? And when you're buying stuff and you can get a 4%, 4.5% mortgage, you're not going to think that thing is going to go to 8 and 9% within a couple of years, right?
Right.
So that was an aggressive deal with, a lot of CapEx and short-term debt and stuff like that. In retrospect, I'm never going to touch anything like that again, right? So we were lucky because we did the work, we did all the renovations, and then interest rate did like this, right? It literally went from 4.5% to 9%. We had not bought a rate cap, which was probably also, a huge lesson there. We were lucky to get it refinanced. Like we were just absolutely struggling. We got it refinanced with a regular bank with a bank at a 6.5% mortgage, right? Which was still a lot more than we had underwritten it to, but we would have had to give the property back had we stayed at 9 or 10% there, right? So that was the lesson there was short-term debt. You have to buy rate caps. It's gut-wrenching to think about what that felt like at that time, right? Just because of the inability to assume that rates are going to skyrocket, right? Nobody thought about that. Because had we thought about that, we would not have done the deal, right?
Yeah, for sure.
Yeah.
You can't look out on the horizon and see that particular increase would have happened. Yeah, sure, an increase, right? But not to that degree in such a short period of time. Very, very difficult. And, that's the unfortunate thing with debt service, right? It is truly, you have to be able to service it. And if it goes up, ultimately that much, now you're not, in some cases, you're not even covering, the expense. And that doesn't last very long. So,
that's right. Yeah.
Yeah. So
that was probably that was definitely some of the lessons there, right? We did a couple more, not that was that short term and it was fixed, but it still was 3 years, right? So those 3 years were up last year. And that also caused some headaches because, we had not, again, interest rates, what were they, 7.5-ish last year, right? We still hadn't underwritten to something like that. You're like, oh yeah, maybe it'll be 5 or 6, but not 7 or 8, causing a challenge in valuations. And then how, well, inflation went up, so everything got more expensive. Plus insurance, that's just been a freaking nightmare. But
Oh, yeah, yeah.
30-40% increases over years. So our expenses have been going like this. Rents, yeah, they've increased, but not to the same rate. So suddenly the NOI did not support a decent refinance, right? Or a decent sale, right? So there was a deal we had to sell last year where we covered our debt, but we did lose some investor equity just because the market just didn't support. The market had softened and we couldn't refinance it. And those are some of those very difficult situations that you can end up in, right? If the market and your timing on the debt doesn't align,
Yeah, exactly. I mean, I think sometimes we forget as investors, as people out there trying to find their next deal to get into, that this is still a game of risk. And, of course, we want to manage that risk as much as possible, but there is still ultimately risk and there's still opportunity to lose money. And, but there's also the opposite, right? There's opportunity to gain. And throughout the time frame that you've been investing, you've seen plenty of those opportunities. Sounds like the Arizona deal was maybe the biggest example of that, right? But where you saw some just phenomenal returns. But you got to remember that there's going to be some in there that are not always going to go as planned and may be one of those lesson learning opportunities. So
yeah, absolutely. And that's, and I've been reflecting on that because it's never a good experience to have to tell your investors that, well, sorry, this deal didn't work out. And, the investors that was in my Arizona deal and then this deal didn't work out so great, they're okay because they've still been making money. It's worse if somebody just invests in that one deal that doesn't go well. Those are the ones that see, it's a little bit like you go to the stock market, you buy one stock and it doesn't go well, right? So I've been reflecting on this, that as an investor, you definitely have to spread your risk and don't put all your eggs in that one basket, because if it leaks, you have a problem, right? So it is a game of like, there's tail, right? There's a positive tail in high income or return, then there's a negative tail of potential losing money, right? Hopefully most deals are in that bell curve in the middle, but both things are there, right? So the successful investors are the ones that stay in the game for the long haul to take the good ones and the bad ones, but still end up okay, right?
Yeah, exactly. Yeah, I think it's there's sometimes if you just look at a snippet of time that it looks like you can't do anything wrong. There was that time frame, kind of right after COVID where, cap rates, went down significantly. And, it was easier it made a lot of people look good. And then there was immediately following that, the challenge of, hey, guess what's around the corner? We're going to increase, interest rates to a phenomenal amount, which is going to, make cap rates expand. And, it's just like a perfect storm, unfortunately. So, so there was another deal, and maybe it was one of the ones you've already talked about. But tell me a little bit about, some of the projects valued at over $250 million. I would just love to hear a little bit about, what kind of a opportunity.
Yeah, that was aggregate. Basically aggregate of over all these different units, right, throughout.
Okay,
so
sure.
Yeah, so there wasn't one deal. Maybe that was no. No, it was an aggregate of everything, right? If you add up all the deals we've done and still own the ones we've sold, right? That's kind of the number I came up with. It sounds kind of crazy to be able to build something like that, right? Now we've sold a lot, so it's not that much. But I think what's important to think about is then as the market started shifting there in 22, 23, we also started shifting with it and decided, okay, what is the new strategy that we can use here that'll make sense, right? And moving maybe away from the apartment and going into the commercial or industrial space. And, so that may be relevant to talk about.
Yeah, yeah. But let's talk a little bit about it. So you did move into industrial space. What type of industrial did you look
Yeah.
at, and kind of geographically where have those purchases been?
Yeah. So I realized I was fairly, heavily exposed to the upper Midwest, Ohio and Pennsylvania and stuff. And in general, that market is, it doesn't go up and down too much, but it has some challenges with cold winters and a general kind of, drain of employee of people. So I was like, okay, I need to start changing my approach, but I didn't know anybody in that market that were in other asset classes. So it's like, okay, it also maybe makes sense to become more local again, because then you have a little bit more control. You can be there more regularly and just kind of really get a feel for what's happening in the market versus being, 5 hours away. So I had a friend who came to me like 3 years ago and said, hey, I see you in an apartment, but I've been investing in commercial or industrial for years. And I really think that there's a lot of opportunity in that in Albuquerque, New Mexico, not like in the country, but in a very specific geographic location, because like there's hardly any vacancy. There's not a lot of people out there buying because it's, you don't see a lot of gurus talking about, buy industrial properties, right? Everybody says apartments. So it was a niche that wasn't very well, there wasn't a lot of competition in there. So, and I started looking at it and I was like, wow, there's a 3% vacancy in Albuquerque. They're not building anything of what we're interested in. They're not building that. They're building, the 400,000 square foot Amazon stuff out in the desert, but in the city, people don't build a 20 or 30,000 square foot warehouse anymore. It's all the Class B and C stuff that's been there for years that is starting to get a little bit tired, right? So it's basically the traditional value add stuff that we have done in apartments. Like we can take that to the industrial, but we don't need to improve them as much as we need to improve an apartment. So make sure the roof doesn't leak, make sure there's heating and cooling and insulation, and there's a functional bathroom and stuff. It doesn't have to be pretty, it just has to be functional. So you don't need to put the same amount of cash into it because you want it, and the tenants are only there from, 8 to 5. They typically take care of their own repairs and all that stuff. So suddenly it's like, wow, this is actually a lot simpler. You have fewer tenants, maybe they even triple net, meaning they pay, insurance and taxes and repairs and maintenance and so on. And I was like, wow, this actually kind of makes sense at that time, right? Again, that also has its cycles, but it seemed like a good time. And interest rates were, 6 and 7%, but the cap rates were like 9 or 10, right? So they actually made sense from a interest rate to cap rate spread and so on, right? So we started doing that, and we've since bought 3 deals. We're under contract to buy a 4th, and they're not big. They're 30, 40,000 square feet each, right? But they're good enough to do a decent return and also keep us in the game on the real estate side.
Yeah, yeah. Well, it's interesting. There's quite a few folks that have kind of moved from multifamily, or at least started to do some type of industrial. After it seemed like over the last 3 years, I've seen that a little bit. Whether it be talking to folks like yourself on the podcast or just friends of mine that weren't doing anything but multifamily and decided to kind of get out of that a little bit, not completely, but just less deal flow. Harder for things to pencil, and so going to look at other potential options out there. So I think it's a strong space. I like industrial. And, I think there's a lot going on in just various sectors, but it is kind of specific to the area, so you just got to see what works in that particular area. And, anything you can get that type of a spread where you've got an 8 or 9, a 9 or a 10 cap, and, you've got, decent interest rates. There's opportunity there. So,
yeah. Yeah, absolutely right. And you're absolutely right. You have to be aware of the market because, certain markets are overbuilt or there's just not enough business to take it up. So you have to pay a lot of attention to that. And it was very interesting how, when we bought some of these, right, they were, we renovated them, then we're immediately full, right? There was almost a line out the door to rent from us. Then this year, or in 2025, when some of that economic uncertainty around tariffs and other things started to creep in, the demand softened rather quickly because people like, well, we don't really know what's going on and stuff like that, right? Now I think there's maybe a little bit more certainty around, so it seems like demand is starting to recover and so on, right? But the thing is about housing always has demand, right? People always need a place to live. But a business, if a business is not successful, it's going to shut down and go out of business, which could have a big impact on that, right? So that's something to pay attention to. So, and especially, we have one warehouse, we have one tenant in the whole damn thing. So if that tenant moves out, we have 100% vacancy, in one day. Finding a one tenant that needs 35,000 square feet could take some time. So you do have to have good reserves. You do have to have that caution around the ups and downs of the business environment and pay attention to that.
Yeah, for sure. Do you do anything specific when it comes to kind of, I guess, depending on when the lease is up, also with that single tenant, provided that they're a good credit tenant and everything, but just curious if you do anything with respect to setting aside reserves or something associated with, vacancy or potential vacancy in the future.
Yeah. I mean, so the most recent deal we did was a little over a year ago, delivered vacant. So that was a little bit scary. We got a national tenant in there with a 4-year lease, a telecommunication provider. So, national tenant, very strong, the rent is no problem at all. But, that 4 years, we don't know what's going to happen after 4 years, right? So we've been saving up so that we have the reserves for debt and taxes and insurance to cover us for a while. Although that one we're actually on the contract to sell because we've created all the value we can. So let's see what the market looks like. And it looks like we're going to get like a 25% IRR on that one.
Nice.
Over 17 months or something like that. So that probably makes sense to maybe take some risk off the table there too, right?
Yeah. On that one, did you find first it was a telecommunications tenant. Did you lean on some of your prior, no? And just curious though, did you get that under contract or get it leased up during the contract period, or how did that become bankable with the vacancy?
Yeah. So no, we did not have a lease until after we closed on it, right? So
okay.
Having strong guarantors. So the broker I was talking about earlier in my early years of investing, and this gentleman is, I think he's 81 now, still super active, and he became one of our partners. So we had 3 partners on there, and I mean the bank looked very, very heavily, and this is recourse, right? This is a local bank, full recourse. They looked very heavily at us and cash flow support through other things, right? So it wasn't just this deal. Like, okay, we know it's not going to make any income for a while. What income do you have in other areas that can support it, right? So it helped to have a very strong, we have pretty much all my deals have been through this bank. So they know us well and they've seen we've done fine. But, and they held back like 18 months of interest and all this other stuff, right? So they made sure that we could pay the debt to them for at least, for a long time and everything else. So they really worked with us, which was great. And then, we had our brokers out there, pounding the payment as soon as we were under contract. And, they found this fantastic tenant. They moved in 3 months after we closed the deal after we'd done all the renovations. So couldn't have gone any better.
Yeah, that's perfect. That's fantastic. Well, that's neat. That's a neat transition. And what surprises or things have you discovered over the course of the last couple, industrial deals that you maybe didn't expect kind of coming in when you decided to make that first transition over?
This is very hyper local. So New Mexico allowed cannabis growing, I think maybe 3 years ago and stuff. And, all these entrepreneurs came out of the woodwork. Oh, we want to grow cannabis and we want to make, edibles and all this stuff. And they would pay like twice the market rate for warehouse space because there was a huge demand. So we're like, okay, well, that's fantastic. So we have one warehouse where we have like different suites. So we this is a lesson here. We's like, okay, yeah, sign this, right? And we got some great, on paper, tenants in there. However, cannabis is in retrospect, I learned it's not an easy business to make money in, right? Because you got to get the growing up, you got to have a market to sell and all that stuff. So several of those tenants just couldn't make it. They literally, they tried, they went out of business, and they left, right? So we had them in there, we had paid our broker's commission, and then suddenly they're gone, and we're like, crap, now we're going to release this space. So we were all celebrating because it's full and all these fantastic tenants, but then they flussed out, right? So that was, I think that the lesson there is, make sure that you don't just take somebody brand new who has this business plan that is not guaranteed, right? You need to, as you said, a tenant that is creditworthy and all this stuff. That was probably a bit of an expensive lesson for us there.
Yeah, that can be. And, for the audience, especially broker fees, it's something they're paying for the length of the time, and the commissions can be significant. And so if you end up paying that and then them not going to term and having to put it back on the market, that's just, it's just an expense, unfortunately.
Yeah. It's, what is it? Usually 6%. Oh, no, I can't remember now. But it can be easy to be tens of thousands of dollars for a long lease, so.
Right, exactly. And then, so tell me a little bit about what you're seeing in the market now, and kind of what you said you have, it sounds like you're selling some stuff, but you also, what are you looking at from a potential buy box in this environment?
Yeah. So, I have built, this portfolio, and we got cash flowing deals. So it's not nearly as urgent for me now to buy real estate, right? So I'm like much more conservative, much more patient than I was, 5-10 years ago. So now the project has to be kind of interesting to me, if that makes sense, right? Not just, let's buy another apartment building, whatever. No, it has to be interesting. So we have been looking at, so I live in Santa Fe, New Mexico, not a small terrain, but a fairly small town. And I always like to own something here because it's an interesting real estate market, but it's always been kind of out of reach from a cash flow standpoint until this year, where another friend of mine came and said, well, I got this space has been for sale, and it's an artist in there who owns the whole thing. I want to create an artist community, in the sense that we want to partition up the space and rent out, anything from a couple hundred square feet to larger spaces for people that are makers of, sculptures and steel and all this stuff. I was like, wow, this sounds really cool, right? Because this is not just buying a building and leasing it out to a telecommunications provider. It's actually creating community and supporting the arts and having something really exciting, right? So I look for stuff that's exciting. We're still trying to figure out if the deal's going to work financially, because it can, it has to be cash flow positive too, right? But,
right.
So stuff like that is what I'm kind of focusing on too, and I'm also, doing private debt. So, as I've realized some equity gains, instead of maybe putting them in as equity, I'll lend out my money and let somebody else do the work, right? Because that allows me to, focus on my coaching and consulting business, which I really find very rewarding as well, and so on, right? So I've learned a lot of things about what I really like to do, and so the real estate investing is that's a long-term wealth, but I don't want to be in it every single day, 40 hours a week. That would burn me out,
Right. No, that makes sense. Well, let's talk a little bit about the coaching business. At what point did you decide that that's kind of the route you wanted to go, and then, wanted to participate in? Just tell us a little bit about that journey for you.
Yeah. So as I was getting ready to leave my job, which logically made sense, but emotionally and courage-wise, I couldn't do it, right? Because I'd been working for 25 plus years for somebody else. So it's like, oh my God, what if I fail, and all this, all the typical fears that show up in, an older gentleman too, like me. So I realized I needed some help, quote unquote, to make that shift myself. So I hired my coach, my kind of not a real estate coach, but a mindset, something that could help me adopt a different mindset. I hired him in 2020, and I'm still working with him, 5 or 6 years later. But because he literally changed my life. He started for me to start seeing my situation in a different light, so that I was like, well, you can always go and go back and get another job, right? That'll probably be straightforward, and all these other things. So he started really helping me making those changes, those shifts myself, and supported me through that, to leaving the job and so on. And I was like, wow, this is fantastic. I'd been doing some mentoring, helping people, invest in smaller deals and stuff, but I didn't have the skills to help them overcome their own limitations, their own hesitations, their own limiting beliefs. So when I started learning and seeing the impact on myself, I was like, wow, how do I become a coach? So I got the training, I got the certification as a certified high performance coach, because I saw that that's the avenue to help people from, hey, I want to invest in real estate, to I want to invest in real estate and change my life. I'll help you with the whole picture, right? And that has been incredibly rewarding, right? Because I worked with, real estate investors that have gone from W-2 jobs to running their own business. I've helped, people get out of their government jobs that they're tired with, or just have more joy in what they're doing. I'm, working, and not only real estate. I mean, now I work with people across the board, but it's just somebody that has they know they need and want to change. They just don't know how to get there, right? So they need that push, that help, that support along the way. And that's been incredibly rewarding. I mean, even just last night, I went and presented in front of a group of people and helped them strengthen their vision and all these things. So that's a lot of fun, right? So it keeps me, engaged and busy every day.
Yeah, it seems like that would be extremely rewarding. Just you getting to see that, and that you've helped other people kind of reach out and grab their goals. In your coaching, what are you finding as being one of the main limitations or stumble blocks, or the things that are kind of that you're going to have to help somebody get through in order to get to the other side of what they're wanting?
Yeah, the starting point is always, people don't have a clear vision of the life they want to create. They have goals, like they have a goal of a certain income or things, but they don't have a vision for the life they want to create. And by vision, we're not talking about goals. We're talking about that emotional state, the experiences you want to have, the people you want to have in your life, the way you want to give back, and so on. And if that's not strong, people just set these and I did a little bit too. I was like, I just want to quit my job. That was my goal, right? But I didn't really have a clear vision for what that's going to look like in the long run. So once we get to help people establish a clearer vision, then the goals and the strategies tend to start falling into place behind that, right? And that's what I think is that's the most important thing for people to establish. And then the next thing is for people to have the courage to step out of their fear, to start taking the action they need to make the changes they need to make, right?
Right.
And I'm not talking about people just work with me because they want to quit their job, but maybe they don't have, the courage to show up as who they are, but their family or their community or at work, right? So, or they need to step up into a leadership position, but they don't know what that looks like, right? So it's all about just getting clear on your vision, then overcoming the fear you have for living towards that vision that's so powerful for you.
Yeah. And what, if there was one thing that can kind of help clarify that vision, what an exercise or whatever it may be, what would be one thing that somebody could do to help clarify that vision?
Well, I actually have a vision workbook on my website, so I can give you that later on. But basically, people can go there and they download. It's like a 5-page, and it asks some very specific questions, and people can sit down and spend some time to work through those questions, right? There's three or four areas we really think about is what are the experiences you want, right? That could be travel, that could be, the kind of people you want to hang out with and whatever. So those experiences, how do you need to grow skill-wise or mindset-wise, and how do you want to give back, right? those are the kind of three areas. And then what's the deep why behind all of that? And once people start working through that, that's a great starting point to get a little bit clear. Because Keith, most people, they will spend more time researching their vacation destination than they will planning their own life, right?
That's true. Yeah, absolutely. It's amazing how that works. And it's also amazing how much kind of coming to that clarity on your vision and what you really want, not just to quit that job, but what does quitting the job mean for you, and why is that something that you desire? It's not just getting out of the job. There's something beyond that. And when you can help them kind of crystallize that, it helps them to be able to get there. So that's great.
With a clear vision, we can start setting goals and working towards our goals.
Well, perfect. Well, this has been awesome, Jens. I appreciate you being on the Wealth Flow. How can people find out more about your Open Doors Capital and the coaching, and if they want to keep up with what you're doing out there?
Yeah, I think the best place is just to go to my personal website, which is jensnielsen.us. And there's links to my coaching. There's a link to my real estate website there. And also, I think they'll pop up and say if you want to get that vision ebook I just talked about. And there's my phone numbers on there and my link to my calendar. So I love to talk to people. So if anybody wants to jump on my calendar and talk about whatever's going on, let's do that.
Perfect. Sounds good. I've got two other questions for you that I ask every guest. One would just be any advice you'd give somebody who maybe they're just starting out in their investment journey.
Find people you can add value to, right? Come to somebody that's more experienced and find ways to add value to them so that you don't have to grind it out by yourself for too many years, right?
Yeah, I think that's great advice. How about a book recommendation? Doesn't have to be real estate related, certainly can be something you've read that's been impactful.
Yeah, so the one I'm reading right now is called Thinking in Bets. It's about how we create, this is by Annie Duke. It's about how she calls it resulting. We think that our decisions, we think that a good decision is because we had a good result, a bad decision because we have a bad result. But quite often a good decision can result in a bad result and vice versa, right? So we got to get out of this like cause and effect because, maybe some of these deals we did everything right, but the market and other things conspired against us. So the good decision turned into a bad result, right? So we got to start separating those things. So it's an interesting read. I'm not done with it yet, but I think it's an interesting read, rethinking how you analyze risk and make decisions.
Yeah. Sounds interesting. I have not had that recommendation, so I'll have to check that one out myself. Well, Jens, this has been great. I appreciate it. Thank you for being on the Wealth Flow, and I think we'll call it a show.
All right. Thanks, Keith.
Yeah, thank you.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.